She's chief investment strategist at Hightower and a CNBC contributor. I was actually thinking about you this morning, Steph. I mean, after I read your notes, I was thinking. I wasn't sitting there thinking about it, but I was thinking about you after I read your notes, and I was thinking how happy you must be that you're mostly a bottoms-up person, because I mean, how would you feel if your business was S&P targets and raising them and lowering them? I'm not going to mention any names, but you watch the show. I mean, you see how many times we've heard 3,200 on the S&P? You know how many people said no, not now, no, not now, no, not now for the past 3, 4, 5 months? What do they do? What do they feel like? We had one guy from Stifel, I think. He was so cocksure about what was going to. I said, well, don't we know about all these things you're scared of? Oh, no. Only I know. But he's like 30. But look where we are now, 44, 25. You haven't had to say one way or another, buy or sell. You just say, well, I'd buy UPS here, or I like that, or you come up with these ideas, and you can kind of don't have to get involved in that other stuff. But you've been kind of friendly towards the market overall. I wouldn't say you've been a bear.
No, definitely not a bear, not a raging bull. To be honest, I've kind of thought we were going to stay in a trading range, and I've been surprised that we have actually rallied as much as we have. But I think the reason why we are rallying and why even yesterday was so powerful, Joe, is because we're slowly checking the boxes of all the concerns, and we're getting some sort of resolution, debt ceiling, bank crisis, even the Fed, right? I mean, the Fed was confusing with the pause and then on the other side, the dot plots going higher, and Powell kind of being hawkish to some degree because of inflation. We got all that. But the point is on the Fed is you're in the ninth inning. Whether they raise 1 or 2 more times from here, we don't really know. But in 6 months, in 12 months, we're not going to be talking about the Fed raising rates. I don't know if we're going to be talking about the Fed cutting, but we're not going to be talking about them raising. And all of those things are good. So now we just have to watch the fundamentals of the economy, and it's been okay, right? I mean, yesterday retail sales really pretty impressive. Housing has rebounded. Autos, the supply chains are getting through, and demand still is strong. And of course, then you have this onshoring theme, and the regional manufacturing data points that are coming out suggest the PMIs are bottoming. So I add it all up, and I'm not going to give you a target on the S&P 500 because that's not what I do. But I do think that all of these things bode well for earnings, and everyone was so concerned and negative over the last several months, quarters, that I think we're now reversing that, and that's a really good thing. And to your point, I can find some stocks that I want to buy.
You won't give an S&P target. I mean, I didn't even bring up the NASDAQ. I mean, what's that up? And anybody who's missed that, anybody who's really missed that they're in a pickle. Because how do you say buy, not get in now, or buy now? And the market is humbling for everyone. There's no doubt about it. But I don't know how, at this point, any of these people say, okay, I guess you just have to come out and say it. I missed 35% in the NASDAQ, and I was wrong. I missed something. That's what you have to do at some point, I would think, don't you? Or do you just hang on and hope for, I don't know what you hope for, a crash or something? Let me ask you, Steph, speaking of that, commercial real estate is a looming, maybe it isn't a duration risk story anymore for what, in the financial sector, for what blows up. How much could commercial real estate blow up the financial sector? Is that possible? Is it a big enough component?
Well, Wells Fargo was at a conference last week, and they talked about how, for them, their exposure is about 10% of their book, right, is commercial real estate. But they have A properties. But I think they're kind of like the least of the less of the bad, right? Because you're going to see some of these other regionals have a lot more exposure. And I think what we're seeing, especially in the valuations, there are some real concerns, right? Because not everybody has A properties, and not everybody has just 10% of their book. Some have more like 20, 25. I don't know. I mean, I think that is something that we all watch and worry about. And we know the regulators are watching about 30 banks right now, just keeping an eye on things to see how things resolve themselves. So that is a concern, Joe. It really is. But I think that at least from the bigger banks, they're much more diversified, and they're getting bigger. I mean, look at Brian Moynihan, what he said this week, that if the regulators would let him buy a smaller bank, he would do it. So the bigger are getting bigger, and I think that's why I don't worry as much, because they represent such a big fraction of the overall market.